Hi everybody, Alex Deployer from Expert Forex, and I hope this video gives you lots of money-making Forex trading ideas. In this video, we're going to be looking at being scammed by brokers, and many times I get emails and postings in our forum saying that people have been scammed by brokers, and often they are using the very best and most popular brokers in the market. And many times they think they have been scammed, but they do not understand how price feeds work and how buy and sell prices work. So in this video, we're going to set the record straight. Now, I did do a video earlier this week where I traded $5,000 to $1 million. And the purpose of this video was really actually to show you how brokers sucker you in and then take your money. That was the real purpose of that video. But it did make people aware that there are brokers out there that will do that type of thing. And this has made a lot of the clients sensitive to scamming brokers. But on the whole, most brokers are not the kind of brokers that were featured in this particular video. And people often find transactions that don't make sense to represent a scam transaction, but in fact, it's just they need to understand how price action works and the spreads on their transactions work. So let's have a look at that. So here's a typical email or response that I get in the forum, and here's a specific one. It says, when news trading using my EA, I see some strange behavior also, such as the price opens at a worse price than requested, often 10 pips worse, and the stop loss is hit earlier than the price has actually reached the stop loss. Could my broker, and he mentions a really top-class broker, regulated by the FCA, be stealing also? I've always blamed this to slippage when news is released. So let's go and explain what's happening in this particular case. I certainly do not expect this to be scamming or improper activities, but normal brokerage, price action and spread management. Now, the first thing you need to do to realize what's going on is to put the buy prices on your chart so that you can see the buy prices. Those buy prices jump and contract so often you will get the biggest fright of your life if you put buy prices on your chart. So let's do that. So you go to MT4, you right click on the chart and tick show or ask line. There it is, show ask line in the comment tab after you've right clicked on the chart, and that will then show you the buy price. And here's an example of a buy price where the line has now been added. There's the buy price, there's the sell price. You can see the difference there is about 24 pips. I have done this over a weekend. It is very common for all brokers to increase their spreads dramatically over weekends. So be aware that is a time when spreads are increased. And this is the problem that this client has, is he's looking at the sell price, because all charts are based on the sell price. So he's looking here and saying, hang on, my stop is here, but in fact he doesn't realize that his stop is in fact there, and when the brokers widen their spreads, that he gets stopped out, or he gets stopped out before the price even reaches. Let's say that's his stop. The price is over here. He gets stopped out and he doesn't realize that that's because the buy price was there. Now, there are periods when the difference between buy price and selling price gets huge. In other words, the spreads get increased, and that's at times when the brokers don't want you to trade. And he specifically mentions this. He has this problem trading announcements. Now, wakey, that is when the broker doesn't want you to trade. So what would you do if you're a broker? You would increase the spread on your prices. And many brokers straightforwardly tell their clients, it's not something that they do on the quiet. They tell their clients before, at announcements, we are going to increase your spreads, and therefore the buy price and the sell price differences will become huge, and then you'll get stopped out. You know, or you would enter, your entry will not be at the price that you thought it should be. And remember, each transaction has two sides. It's got a sell side and a buy side. You either enter on the sell and get out on the buy, or you enter on the buy and you get out on the sell. But either way, you're going to be exposed to the huge spread that can happen over weekends or before an announcement. So here's my answer to the question that was asked. No, that is perfectly normal. What is confusing is that you're not seeing the buy price on your charts. So I recommend that he puts the buy price on so that he can see that when he's entering a buy transaction, at what price that buy transaction happens, and when he gets enters a stop, at what price he gets stopped out. It's very clear when you have the buy price shown on your chart. Unfortunately, you don't see the historic movement of the buy price, but at the time you will see it. We have tools that will also show you historic movement on buy prices, and it often looks like the price was nowhere close to that to the stop out level unless you do know what the buy price is. So it only looks like the broker is cheating, but because of these huge differences between buy prices and sell prices, you will often get stopped out when you don't expect to. Also realize that near announcements or over weekends, it is dangerous as all brokers increase their spreads. They don't want you to trade over those times. So just look at the difference in the buy price and the sell price shown here. It's 24 pips. This was done over a weekend. So you would be stopped out. If you've got a 10 pip stop and the broker increases the spread to 24, you will just plainly get stopped out. As simple as that. And that will happen at any time in live trading, such as announcement times or times when there's big risk in the market. So we have a tool here. I have done a video showing the importance of monitoring your broker spreads, and this tool actually monitors your broker spreads, and then at an announcement, and you can see what happens at an announcement. The spreads increase dramatically, and when I say dramatically, I mean dramatically, sometimes 10 times their normal size, and it happens for a very short time and then goes back. So in that time you'll get stopped out if you have an active stop that is close, is within that limit. On all of our EAs we also have an EA monitoring tool. So if you look here, the current spread is 24. That's over a weekend. The average is only 4.8. So when there's normal trading going on, the average is only 4.8. But the maximum trade for this particular currency was 53 pips. So it shows you the importance of monitoring this. If you do experience problems with this, just take a photo of the transaction and send it to the broker to explain to you. But he will probably explain to you exactly what I'm explaining to you now. There was a spike in the spread due to an event that happened, and that is why it looks like the broker scammed you, but it isn't. It's just normal. This is normal process. It's not unusual. Most brokers do that. Okay, so what do you do because of all of the spread spiking? Is you must understand the impact of spreads. You must understand your buy price is going to go through the roof when spreads increase. You need to use big stops to avoid being exposed to that, and I like using larger time frames such as the daily or the 4-hour to trade, so I can put bigger stops and bigger targets and not be exposed to these spread spikes. Also, it's important to monitor your spreads, as I've discussed earlier, and also be aware of the time spread widening happens, such as near major announcements and weekends. And we have also got some tools where you can hedge your trades just before announcement. These inconsistent spread spikes also are a reason why EAs do not work consistently and can produce results that are worse than when tested. So when you have a transaction that doesn't look just right, don't think that the broker's out there to get you personally and to scam you personally. You need to understand the dynamics that happens within price action, and also the dynamics that happens within spread management, which increases the buy price of your transactions tremendously. You can get stopped out with a transaction that hasn't moved in price, but because the broker or circumstances have increased the spreads, you can get stopped out with no actual price movement in the market. So I hope this video has answered some of your questions about some transactions that haven't made sense to you in the past. Thanks for watching this video. If you've liked it, please give it a like. If you haven't subscribed yet, subscribe and click the bell. But most importantly, share this video. You can do this in many ways. Message your friends, send them emails, or share it on social media, on Facebook, on Twitter, and those kind of places. So from me, Alex Aploy, cheerio.